Hi and welcome to Your Prosperity, a podcast series on financial topics including tax, wealth creation, superannuation, lending, audit, and many other things that we deal with here on a regular basis at Prosperity Advisors. As with all financial podcasts, any advice you hear in this is general in nature and not to be relied upon. Please contact us for any specific advice. Hi and welcome to the podcast. Today is the 9th of September 2022. I'm Brendan Campbell and here with Megan Smith. And today we're going to talk to you about effectively managing or running your business. Megan, thanks for joining us today.
Thanks for having me, Brendan.
Excellent. Effective management of your business, bit of a title we've been sort of throwing around and talking about, and something we think is going to be relevant to the listeners. So I guess the nuts and bolts of what we're trying to get to here is sometimes you're a business owner, you might have bought the business, or maybe you've started up the business. Typically, you've probably been involved in the business as it's grown, and you're really one of the workers or one of the drivers of the business. But it's important to sort of sit back and try and effectively run this business from a management point of view, which is something Megan gets involved with a lot of her clients. Hence, I've got her on today. So, Megan, how do you deal with this with your clients, and what's some of the strategies you use to make sure clients are effectively managing their business from a financial point of view?
Yeah, thanks, Brendan. It's always a bit of a journey to take people on. So often people can fall into business ownership almost because they're great at their trade or profession, and they take a leadership interest in that, establish or purchase a business, as you said, and all of a sudden they become responsible for HR, finance, marketing, and the overall results of the business. So, which
is often a different job to what they were doing when they started this, and their passion for it.
Absolutely, yeah, it's a real transition. So the opportunity in educating around that management of the business separately to working in the business is to try and put some rigor and structure around the process, as well as be surrounded by good people with complementary skill set to help support the business owner on that journey. So one of the first steps we would look at would be around the reporting frequency and content of the report as well, to make sure that we're using relevant information that's concise but detailed enough to tell the story and provide lead indicators of where the business results are headed.
So when you say relevant information, I guess what should they be reporting on? Say I'm a business. Well, let's keep it generic. I'm a small business. I've got 5 or 6 staff. I guess I'm running it. Maybe bigger than that. Maybe 10 staff. What should I be looking at from a financial point of view? Being an accountant, obviously similar to yourself, I kind of have a rough idea where you're going with this. But what for the listeners out there, what should you be looking at?
Yeah, look. So we typically start with what's the longer term plan. So pick a 5-year horizon. What are the high-level goals, financial and otherwise, of the business in that period, and then wind it back and say, well, that's where we want to be in 5 years, where do we need to be in 3, and what are the 1-year targets to get there. From that, you can set weekly and monthly goals and measures. It really depends on the type of business as to what then is the weekly information to look at. Are sales targets most important? Is productivity of the staff important? Cash collections always important. So just keeping the health in the short weekly metrics. That should be a small number of very meaningful KPIs to be managing on a weekly basis. On the more formal reporting structure, that monthly cycle is really important. So making sure on a monthly basis that we've got solid financial reporting that's reliable, accurate, that it tells the story and is understood by the stakeholders in the business. So full profit and loss. So often I see people say, yeah, I'm reading the profit and loss, but never look at a balance sheet. Those reports have to be read in conjunction with each other, and often there's some education required about how to read them both and how do they interact.
Yeah, absolutely. And I guess depending on the business too, maybe cash flow would be important as well. But I just want to touch on something you said there. So you said meeting weekly, which is quite regular. I assume that meeting's not an hour and a half meeting looking at a lot of data, like that's just going to kill your week.
Yeah.
Like what sort of put some times around it, I guess, and obviously very general and very specific advice would be needed depending on the size of the business. But as a general rule, how long would these sort of meetings run? These weekly, quarterly, monthlies?
Yeah, look, I'm a fan of Vern Harnish's materials with the Rockefeller habits. And he talks about a quick 5 to 10 minute daily meeting of priorities, a weekly meeting, which is half an hour to an hour. And then that monthly meeting might be 1 to 2 hours, but different content in each of those forums, of course. And as you say, a weekly cycle is very quick. You shouldn't be trying to look at a full P&L every week. The week is about, is my top line on track? Is the pipeline coming through? Are my key costs in control? So we see a great example of that being the use of platforms for businesses with large staff commitments and changing rosters. Then using a system like Deputy, Tanda, Key Pay allows the costing of your roster. So you know every week when you've committed your staff to the business, what the cost of that is going to be on the business. Comparing that staff cost to turnover and knowing what your percentage of labour cost should be would be really important information on a weekly basis.
And you'd have that, I guess, with some budgets or some targets in mind. So each week you're sort of knowing, well, yeah, if you're a sales-driven business, what were my sales for the week and what are they looking like for the rest of the month? Or if you're a people service sort of driven business, what's the productivity of the staff like? How we, those sort of things. And you'll have targets there that you're roughly trying to track. And I guess that's about just monitoring to keep on top of it. But the important thing, I think, is do businesses put aside the time to just look at, like, deliberate time just to look at that data? They've probably got a rough idea of it, but how often do you see that people don't actually make time to sit and look at that data? You're talking weekly. I'm sometimes happy when a client can meet, quarterly or monthly to look at it. And I hate the idea of, how often do you look at this? Oh, with the tax return, we go through it, and that's not enough these days if you want to grow and you want to meet some targets. If you otherwise you end up coasting along.
Yeah, 100%. Look, if you don't already have a budget in place for your business for the 2023 financial year, it will be very hard to imagine how you would know each week whether you're on track for your 5-year goals or even where you might be in a year.
And I guess that's a rolling number too, the 3 years, the 5 years, those sort of things. That's sort of rolling a little bit as it goes along. But I want to talk a bit about also how do you know what to report? I presume you'd set it with the client when you're talking to them, but what metrics do you normally look for? You mentioned sales, you mentioned wages. Are they sort of the main ones? Is there anything else you'd normally bring into that meeting or a format you'd use to do that?
Yeah, look, it really depends on the nature of the business. Revenue is always important. It depends on the level of recurring known revenue and how much the business is reliant on winning new business every week to make sales targets. Relevant to look at the mix of the sales as well. So quite often in a business, you'll have high margin sales and then lower margin sales. Take the McDonald's example of an upsell on fries with drink, right? Yeah, so it's understanding what the fries are in your business and making sure that you might have hit your sales target for the week or the month. But if you're not also managing the margin or the mix of sales around that, or the pipeline of what's coming for the next 3 months, then your short-term view might not really give you the right view on profitability or the future health of the business.
And I guess that's cyclical a bit too. If I'm a Christmas decoration shop, I'm probably pretty heavy in October, November, December, but pretty light in January. I guess it's understanding the nature of your business too and trying to set those targets efficiently. So who should we say look at the reports? Is that a meeting where you're sitting down with key people in your business? Is it you as the owner, the running the business, looking at it? And depends on the size, obviously, but who should you drag into these meetings? I assume it's not the whole workforce.
No, that's right. Look, it depends on 2 things. It depends on where's the business at and what are the key issues going on at the moment. So is it a business as usual environment, or are we in a bit of an opportunity stage or a crisis stage? Separate to that, what are the internal skills and key stakeholders to the business who can help the business owner deliver the results? Dependent on those two things would change the participation of the group, and might drive at different times the need to bring in external advisors of complementary skill sets, depending on the strategy that you're trying to nail and the skills you're looking to supplement from internal.
And I guess if you're looking at something like a sales metric, which would be quite important and maybe one of those regular things you look at in those meetings, I guess it's important to have people who can directly affect that. Who, there's no point having a meeting and saying we need to increase sales, and it's it's you and the expense manager looking at it. No point. I think you need to include a salesman occasionally there, or maybe the manager of that group.
Yeah, correct. And look, it's quite often that, as you say, the weekly meeting would be more of an operational team. Then the monthly meeting would be a broader audience. And quite often then we might participate in say, a quarterly meeting of the business, just to add that additional structure and broader view of what's happening.
And I think that's really important too, I find with those meetings, the accountability that having someone like yourself or an external person coming in, it's not as though when you're in the meeting that you have a vote in that meeting essentially to say this is what you need to do. But I think one of the key things is you can help understand information, but I think even more importantly, you keep them accountable. So I find with those meetings, normally it's oh yes, we'll do this. The next quarter you meet and have you done that? No, we haven't. You can't really make them do it, but if they have to say a couple of times to themselves or to someone else, no, I haven't done that, they sort of get the idea, and by the next meeting they're sorting those things out. So I think that's something really good about having an external person come in to help with those meetings. You can really keep them accountable, or keep yourselves accountable to what decisions you agreed upon and that you wanted to do. So it's not just a meeting for the sake of a meeting, but actually having an action that is actioned at the end of the meeting.
Yeah, I agree, Brendan. The accountability piece is really important to ensure that the meetings stay effective and progress is made. The other great opportunity for us is to also provide an external perspective. Being a business owner can be a very lonely ride. Often you're the one at the top, everything stops there, and sometimes having an external advisor who is there alongside you, helping with some of the difficult conversations, or helping keep perspective that it's not just you that is currently having this external challenge, or navigating the issue and bringing fresh ideas about the way that we've seen other people solve the problem, or that we might have tackled something in our own business, is also sometimes just a great support to the business owner to not have them feel so alone. Yeah,
no, absolutely. So from a practical point of view, I'm a business owner. I'm listening to this podcast. I'm thinking I definitely don't meet weekly, and I definitely don't look. I might look at a quarterly, but monthly seems a stretch. Where do you start? How do you start this process off? I mean, it might be hard going straight to weekly. Maybe it's quarterly. Maybe, something like that. But where do you even start? That's the hard bit. Often is, okay, I want to do something like this. I want to improve my business. What do I do now?
Yeah. Great question. My first comment would be, have you got a 2023 financial year budget in place? And have you got a set of financial statements for FY22 that are accurate and that you understand? If you've got those two things in place, then you're doing well. It's a great start. And I would then say build on that and make sure that you're looking at the KPIs, drivers in the business, and that you're reporting links to it, and that you've got that longer strategy set in place.
And it's probably, I guess, having a chat about, well, what are the drivers? What are the key things we want to do? And what, not just a budget, not just a budget isn't just last year plus 5% or something. It's key drivers of, we really think we've got this product or this whatever we've got, and this is where we want to go with it. I guess it's about making sure you've got a plan And
that's right. Yeah.
come up with that plan. That's the first step.
Yeah, that's it. And look, if you don't have a budget or a well understood set of financials from last year, then no better time to start than now. And it's about building those documents with some support, because if they're not in place, it's likely this might be a new area for you, and making sure that you start off with a well-constructed budget that's achievable and has linked metrics.
Yeah, achievable is a key thing there, isn't it? There's nothing worse than Q1 and going, oh, we've missed budget by a mile. Yeah. It derails everything. I liked what you said at the start too. You start with a 5-year plan, then a 3-year, then a 1 year. Like you start with where you want to be and build it back to work out how to get there. Because a lot of people probably set a budget thinking this is what we want to do for next year, but maybe they haven't really planned out further than that. So that's a really good start, I think. Yeah. Some great information you said. One other thing I want to touch on just before we finish up as well. You mentioned someone might sit there and not understand the financial statements. What do they do if financial statements don't mean anything to them? They go, okay, it's profit loss, it's a balance sheet, it's a cash flow. You get what they are, but you don't really understand it. What should people do there? Yeah,
look, sit with your accountant a bit longer, have another go, and keep persevering to educate and build your knowledge and understanding of how all of those numbers interact, of what happens after you sell a product with the cost of goods sold and the overhead spend and net profit. And I often find people can grasp that, but it's where did my profit go? How does that interact with my balance sheet? That's the one that I feel often it starts to come undone.
I've got a profit of 50 grand, but no cash in the bank. Well, that's because you owed 50 grand by your debtors. Yeah, you need to tie that in.
Look on your shelves at your stock. So that's it. But it's making those planned decisions and an understanding that to keep committing to stock or to offer credit terms is at a consequence of your cash flow. So it's not just good for accountants to enjoy reading the figures, but it's fundamental to running a business that those figures are understood.
Yeah, fantastic. Well, look, I do appreciate that, Megan. I think that's given people hopefully a bit of an idea of where to start. Obviously, it's not a detailed plan for them to follow, but talk to your accountant, even better, talk to us. But that's a great place to start when people are looking at running their business from a financial point of view and not from a hands-on driven, whether they're the sales originally, wherever they started, their focus is probably in that area. But stepping back and thinking, what's my plan? 5 years, 3 years, 1 year, breaking it down into meetings to try and achieve those targets is great. So thank you very much for joining us, Megan, and thank you everyone who has listening and all our followers, which is great. Hope you enjoyed the podcast. Megan, for more information about you, email is probably the best. How do they get hold of you?
Yeah, thanks, Brendan. My email address is msmith@prosperity.com.au.
Great, thank you. And myself always as well, bcampbell@prosperity.com.au. Megan's in our Newcastle office. For anything about our firm or about what we do or some of the podcasts you've been listening to, if you like any of the content, jump on the website prosperity.com.au and follow the links from there. And of course, for this podcast, if you like it, give us a like and share, go back and listen to some of the other ones and we'll go from there. So thanks everyone for joining us, and thanks Megan once again.
Thanks, Brendan.
Thanks for joining us for today's podcast. Hopefully you liked it, and if so, please give us a few stars, like and share. And if you'd like to follow the series, please subscribe and pass any information on to your friends as well if you think they might like it. For more information about who we are, head to prosperity.com.au and follow the links.